Welcome to a summary of the Investors Chronicle magazine for the edition for the 18th to the 24th of July 2014. This is a selection of stories from the Investors Chronicle meant for people who don't read it but might benefit from the information. All the content belongs to the Investors Chronicle. The Inflation Generation. To some extent, we are shaped by our experiences as teens and young adults. The Investment Chronicle argues that there are people over 50 who have memories of high inflation of the 1970s are alert about the dangers of high inflation. By contrast, 30-somethings and those over 70 who saw low inflation are not so worried about it. A survey by the European Central Bank found that personal experience of living in times of high inflation determined people's support for anti-inflationary policies. Also, Malmendier and Nagel, the two Californian-based economists, found that investors who have experience in high inflation are significantly less likely to own bonds than investors who have experienced lower inflation. Peer pressure and financial choices. The Investors Chronicle's Chris Dillow concludes that people are more likely to switch funds if their spouses, neighbors, and colleagues do. He argues that there's strong evidence to suggest that some of the big financial choices we make, such as how much we save, what we invest in, and whether we buy a car, are influenced by peer pressure. This suggests a danger that many of us are misled into making suboptimal decisions. Rose Petroleum. Rose Petroleum is a mining-turned oil exploration company that hopes to join the US shale oil and gas bonanza. In March, it bought a 75% interest in a 230,000 acre land plot with prospects of shale oil and gas in Utah. It has now published reports suggesting that it is worth $2.4 billion. An independent report by the company Ryder Scott reports 1.7 billion barrels of recoverable oil and condensates and 4.8 trillion cubic feet of recoverable gas. In two separate formations, the Mancos Shales and Paradox Clastics. The Paradox Clastics are said to have stacked formations that are thicker than usual. They say this means that Rose Petroleum can drill cheap vertical wells instead of expensive horizontal ones. The Mancos Shales are also said to be shallower than usual, meaning that drilling should be cheaper and quicker. However, this is carrying on with the last story, the land is largely unexplored, and it's in the early stages of development, but this has not dampened the enthusiasm of British investors. Rose's share price has increased threefold since May to 3.2 pence. China, according to Dale Nichols. Dale Nichols runs the Fidelity China Special Situations Investment Trust. He says that the Chinese government wants to change the economy to a more consumer-led model and is committed to improving living standards of the population. This will cover areas like consumer goods, services, healthcare, anti-pollution, and the internet. He thinks that the private companies in particular are likely to benefit from these areas of improvement. He also points out that China has more than 500 million internet users and that the online consumption is rising rapidly. Therefore, mobile internet is an area of huge potential, with companies like Alibaba leading the way. Investing in oil. These are tense times for investors with exposure of oil in their investment portfolio. Oil prices are high, and conflict in Iraq, the biggest oil-producing country, is a threat to the production capacity of OPEC. The conflict in the Middle East has an impact far beyond the region. For example, take India. The conflict in Iraq poses a risk to the Indian stock market, which has gained popularity with investors after Modi's victory. India is heavily reliant on imported oil. Higher oil price, driven up by conflict in Iraq, could impede the growth of the economy. Mr. James Sutton, who is a client portfolio manager at JP Morgan Asset Management, says that oil giants such as GP, Exxon, and Chevron are posting poor growth forecasts, but that smaller exploration-based oil companies are doing better. In the US, he likes Anadarko, Continental Resources, and Suncor Energy. In Colombia, he likes Perex Resources and Grantiera, and DNO International in Kyrgyzstan. Such small companies are undervalued and therefore present potential and opportunity. To expose a small part of your investment portfolio to oil, the Investors Chronicle recommends BlackRock Emerging Markets Trust with 31.3% exposure, mostly in Turkey, Russia, and Poland. They also mention BlackRock Frontiers Investment Trust that invests in regions like Kuwait, Nigeria, and Pakistan. If you want heavy exposure to oil and the energy sector, they recommend Market Vectors Russia ETF that has a 40.2% allocation to energy. However, political turbulence, long-term threat of environmental hazards, etc., point to a number of understandable reasons why an investor may decide that the risks associated with commodities is simply too high for their portfolio. For example, Pictet Russia Index USD has had a 58.1% exposure to oil and lost 4.8% over the past year. But if you want a fund that is lighter on oil exposure, Neptune Russia and Greater Russia Fund might be a better choice.